Russia's recent invasion of Ukraine caused significant consequences to the global economy, particularly in the oil sector. Gas prices have been soaring all around the world, particularly in the United States. Elon Musk predicts that this oil crisis could lead to much bigger problems for the country. Join us in today's video as we examine Elon Musk's perspective. Elon Musk has lately taken to Twitter in order to describe how the United States is about to experience a terrible catastrophe as a direct result of the conflict in Ukraine. Elon stated in the tweet, "Hate to say it, but we need to increase oil and gas output immediately. Extraordinary times demand extraordinary measures." Obviously, this would negatively affect Tesla, but sustainable energy solutions simply can't react instantaneously to make up for Russian oil and gas exports. Elon added in a follow-up post a few moments later. Even after Russia invaded Ukraine, many countries have imposed sanctions on Russia despite its dependence on Russian oil. As a result, there are still concerns about the potential for rising energy prices, specifically in Europe. However, Elon did not stop there. Additionally, he has advocated for an increase in nuclear energy production in Europe. The chief executive officer of Tesla posted a message on Twitter stating, "Hopefully, it is now extremely obvious that Europe should restart dormant nuclear power stations and increase the power output of existing ones. This is critical to national and international security." If figures from the International Atomic Energy Agency and the Bloomberg World Nuclear Industry Status Report are correct, then Europe will house 102 nuclear reactors scheduled for retirement by the end of 2022. Around one-third of Europe's gas needs are supplied by Russia, according to the International Energy Agency. While the rest of the world is towards renewable energy, Europe has become increasingly reliant on Russian natural gas supplies as a transition fuel. However, the transition to renewable energy sources has not been completed quickly enough for the European Union to lessen its dependency on gas supplied by Russia. Since March 2011, when the Fukushima nuclear disaster occurred, Germany has been retiring nuclear plants but continues to depend on Russia for more than 50% of its natural gas needs. According to an article by Reuters, all three of Germany's remaining nuclear power facilities are scheduled to be shut down by the end of 2022. However, as a result of recent happenings, it is currently being considered to postpone the country's planned disengagement from the nuclear energy and coal industries. Elon Musk contends that burning nuclear power is far preferable to burning fossil fuels in terms of reducing global warming. Elon Musk later tweeted, "For those who mistakenly think this is a radiation risk, pick what you think is the worst location. I will travel there and eat locally grown food on TV. I did this in Japan many years ago, shortly after Fukushima. Radiation risk is much lower than most people believe." Elon claimed there is far less radiation risk to be concerned about than most people think. According to a Solar City media release, in July 2011, only a few short months after the nuclear tragedy that occurred there, Elon traveled to Fukushima. Both the Chernobyl nuclear power plant disaster in the former Soviet Union in 1986 and the Fukushima nuclear power plant disaster in Japan in 2011 are considered among the worst accidents in the history of nuclear power industry. According to a UN assessment published in 2021, the people of Fukushima have suffered no severe health impacts due to the accident's radioactive exposure. According to a research by Energy Intelligence, the number of barrels of oil exported by Russia has decreased by one-third as a direct result of the numerous sanctions imposed on the country by the West due to its aggressive invasion of Ukraine, despite the fact that the sanctions are not directed explicitly at the export of oil and gas from Russia. According to the information provided by the specialized media outlet for the industry, potential purchasers of Russian cargo have been exhibiting a general lack of confidence. As a result of the recent events, oil prices have skyrocketed to all-time highs, which has sent the price of gasoline, diesel, and other fuels through the roof. There is no question that the world has to generate more oil as quickly as possible. However, the question is, where will it come from? Because of the increasing number of sanctions, refiners and merchants increasingly view Russian oil as dangerous and excessively risky. As a result, the amount of Russian oil available on the market is gradually decreasing. At the moment, millions of barrels of oil produced in Russia are being wasted each and every day because no one is buying it. Therefore, this increases the pressure on markets already low in available oil. In the past few months, it has become increasingly apparent that the majority of the OPEC and OPEC Plus countries, which practically manage the world's oil reserves, lacked a considerable excess capacity to expand supply. According to the current indications, the surplus capacity is concentrated solely in Saudi Arabia and the United Arab Emirates. According to media sources, an agreement with Iran on its nuclear program may be reached soon. This would allow for an immediate return to markets of 500,000 or even 1 million daily barrels of oil. The most productive oil field in the United States is located in Texas's Permian Basin, and recent months have seen an increase in domestic drilling activity there. There are currently 248 operational rigs, which is close to the amount that existed before the pandemic. The majority of this operation has thus far been focused on wells that have been drilled in the past but not have yet been finished. Oil corporations have indeed been able to profit from a rise in oil prices while still maintaining the financial restraint investors require, but ultimately their backlog will run out. Some private businesses have begun new drilling operations, and they are expanding their focus beyond the Permian Basin to include other, less productive basins that they had previously given up on. In the middle of 2020, drilling reached a complete standstill in both the Anadarko Basin in Oklahoma and the DJ Basin in Colorado. However, both of these basins are now witnessing a comeback, although on a more modest scale. And despite the fact that Wall Street and private equity groups have moved their focus to renewable investments these days, oil corporations are doing pretty thanks to the recent price rises that have left them with loads of cash. I still hear complaints about how oil and gas are getting frozen out of bank financing over climate and environmental, social, and governance concerns. But honestly, with the amount of cash they're making right now, a lot of them don't actually need banks. They're generating plenty of cash on their own, remarked Clark Williams Derry, an energy finance expert at the Institute of Energy Economics and Financial Analysis. To further illustrate his thesis, the 7 largest oil firms in the West, including Chevron, ExxonMobil, Shell, and BP, are planning to purchase their very own shares in the near future. According to estimates provided by research organizations, the companies will devote between $38 and $41 billion to the purchase of their very own stocks, which will, in turn, increase the value of their stocks and, of course, their income executives. That is approximately twice as much as these identical corporations spent on their shares during the previous bull market in 2014, when the total was $21 billion. Even though they're talking about energy revolution and net zero projects, they're cashing in on the rising need for oil following the pandemic and Ukraine conflict. While petrol costs are skyrocketing, this desire isn't going away. The price of a gallon of standard unleaded gasoline in the United States has increased by over 4 cents throughout the past weeks, reaching a new average of $3.53. This represents a rise of approximately 90 cents from the same time last year. Prices are rapidly approaching $5 per gallon on average in the state of California, while San Diego County just posted the greatest gasoline prices in recorded history at $4.74 per gallon. OPEC and its allies have come to an agreement to raise output beginning in the next month. However, the fairly minor rise of 400,000 barrels per day has already been factored into the market prices. The government of Joe Biden has been putting pressure on OPEC to open the taps for several months, but the organization has disregarded its requests. According to observers, Russia may redirect Russian crude oil supplies for use in the war effort, which might increase prices. If OPEC does not take action, the price of a barrel of oil might reach $170 at its highest point. This might bring the average price of a gallon of gasoline in the United States above $4, which has been considered for a long time to be the point at which sales begin to collapse. When the pandemic was the most significant of our challenges a year ago, President Biden was already in such a state of desperation that he requested those who generate shale gas to increase our output. Shale is a sedimentary rock commonly utilized in manufacturing bricks and pottery. However, this is not what Biden intends to use it for. Oil shale is a particularly useful resource for extracting natural gas and petroleum. Scott Sheffield, CEO of Pioneer Natural Resources, stated to Bloomberg that shale producers cannot save the United States because investors have not lowered their return expectations. As soon as they observe corporations growing their drilling operations and attempting to increase once more, they are going to reduce the amount of funding they provide. According to the chief executive officer, even if producers were in possession of the necessary funds, they do not have sufficient manpower to drill additional wells. Several other producers are having trouble getting frac crews, they're having trouble getting labor, and they're having trouble getting sand. That's going to keep anybody from growing, according to Sheffield. The Texas Oil and Gas Association estimates that there are almost 66,000 employment opportunities in the oil and gas business in the state of Texas itself. However, while having a monthly hiring rate of 2,633 on average, the sector still has a significant distance to travel before reaching full employment. In addition, the oil sector is not exempt from inflation impacting the rest of America. The expenses of producing shale formations went up as much as 15% in the second half of 2021, and they may go up by another 6% just this year. The chief executive officer of Pioneer believes that only Saudi Arabia or another big OPEC country can rapidly alter the market to bring comfort to American consumers. It is yet unclear whether this week's jump in prices caused by Putin's actions would provide the oil corporations with the necessary stimulus to increase production. The stunning statements made by Elon certainly aid that cause as well. They definitely can't produce enough oil on their own to make a significant difference. But if one of them goes against the grain and starts drilling, others might follow suit. And if investors begin to recognize the potential for profits in their holdings, there is a better chance that they will finally begin reinvesting additional capital into the oil sector. What do you think about Elon's desperate call for an increase in oil production? How do you think the US government will respond to this impending gas crisis? Share your thoughts in the comment section down below. Kindly like and subscribe, and we'll see you on the next one.